Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, April 25th, 2025. Ron Quaranta here with my dear friend and co-host, the one, the only David Brill. We believe we'll have Josh in some capacity at some point on the Gulf Stream. David, before we begin, for everyone in the audience, thank you so much for joining us. Our usual disclaimer is if you're watching us on LinkedIn Live or X or YouTube, please keep in mind that nothing discussed really is accounting, investment, legal, or tax advice. Everything David or Josh or I really talk about is our own personal opinions, not necessarily the opinions of our respective firms. David, Bitcoin above 95. It's a good morning.
It's been a really good week. Actually, it's been Bitcoin's biggest weekly gain since the election. So, it's the kind of thing we see in crypto where when we have runs up, it runs up very fast.
Yeah.
And then, it's the same way on the downward side. So we're seeing a nice move here. We've gone past a couple of key levels and we're flirting with a big technical level right now.
David, you've been talking about this for a long time with expertise and perspective. Obviously the phrase and word tariff and kind of the chaos of markets and the uncertainty macro broadly in TradFi and crypto. Do you attribute this kind of, we're up over almost 13% on the week just on BTC. Do you attribute this to kind of the softening or pulling back on some of the tariff conversation, or is there a bigger story here?
Well, I think there's a bigger story within our world, but we're affected by the TradFi world. And so if, major moves are happening to the downside in crypto in traditional markets, even though we're starting to decouple from NASDAQ, we can't expect to become unscathed from it. Yeah. So I do think that some of the rhetoric has calmed down on the tariffs. I think that there's some realization that there has to be some normalcy. And again, like on a macro level, yes, our trading needs to be addressed. It's just messaging, and I think it's just the way it's being done could be refined.
It's also interesting, David, when you start looking at the models moving forward on some of this. Let's pull that back for a second. We've been talking about kind of support levels for BTC. I haven't looked at the money flows in on the ETFs yet. I think someone had mentioned potentially Sailor that the IBIT ETF might be the largest ETF in history in the world in 10 years. Are we seeing inflows into Bitcoin? Is that what substantiates the 95,000 floor?
I think what we're seeing is a really classic situation of retail selling,
yeah,
and a lot of institutions and whales buying. So we've seen days with almost $1 billion worth of inflows, and big holders are buying. You have this new vehicle with Tether and SoftBank and Cantor Fitzgerald, which I think is really interesting. That stock has really pumped. It's sort of merged. It's a SPAC and it's merging into another one, but yeah. I didn't check it today, but it was over 100% in the last few days. So, you're seeing opportunistic buying here. And I think if there were, sovereign wealth funds, there were people who really wanted to get, large institutions or folks who wanted to get a position in that 75 to 78 range was a really interesting place to build a position.
Interesting, David, I mentioned that I was at an event in New York City yesterday, and I got the opportunity to meet a lot of TradFi folks on the sovereign wealth fund side, on the alternative investment management side. And there is a lot of dry powder, to your point, particularly from the sovereigns, particularly from really large institutions overseas that are looking to allocate to Bitcoin. So again, we're not making price predictions particularly, but 90.95 feels like a good floor. But one of the things that concerns me, you mentioned 21 Company. I think that's the name of the company, the Tether, SoftBank, Cantor conglomeration. David, I don't mean to be cynical about it, but there's no operating business there other than buying Bitcoin, correct?
I mean, from what I've read, that's the case. But look, I think Strategy's been very successful. They do have another business, but they've been very successful. And I think there is a desire for people to get exposure to this. So, whether it be, strategy, whether it be buying the ETFs. There's an interview with the new CEO for this entity. He was talking about different metrics like price per Bitcoin or something along those lines. So look, it's a natural progression we're seeing. But the most important thing is that we're seeing demand and we're seeing big holders, have the demand for it.
Yeah. It's interesting, David. I think one of the other news items that I'm wondering how much of the news powers some of the market moves we're seeing. And I want to come back to the alts for a second because that's another side of the market we really haven't spoken about. But there's been a lot of news. I think the Fed recently rescinded its 2023 guidance on how banks can engage in the crypto space. OCC has done likewise. FDIC has done likewise. There's an argument that they really haven't gone full throttle on that because there are certain organizations that can't get federal bank charters and have access to the Fed system. But I'm going to ask the question, David, that's a bit of a provocative question. Is Operation Choke Point 2.0 dead? And is that driving some of the gains that we're seeing as well?
I don't know that it's dead, but it's dying. I think that, this administration is dismantling step by step things, the things that the Biden administration put in place quietly, or not so quietly after we had a few bank failures. And they're really removing those obstacles. And look, if we're going to have a stablecoin bill, which I think, which is working through, and I'll talk about that with Josh. I've been reading up quite a bit about it.
Yeah.
Banks have to have an involvement in it. It's not just going to be, Circle and Tether and a couple of other stable coins. There's going to be a more broader ecosystem. So there needs to be rules to play by. And part of the rules needs to be that banks can touch stable coins and interact with crypto. And we need to do it in a thoughtful way. And it feels like a lot of these obstacles are being removed. But, then again, there's still some things that are going on.
David, let me interrupt for 1 second. For everyone who's joining us, thank you so much. If you've got questions for David or Josh or I, please put them in the chat. We'll definitely try to address them as quickly as we can. We don't have Josh on video. She will not grace us on camera today, unfortunately. But Josh, we've got you on audio. Can you hear us?
I can hear you. Can you guys hear me?
We can. Is it the Gulf Stream today, Josh, or where are you traveling to today?
No, full disclosure, it's a severely delayed train. So I'm actually on the train when I was not supposed to be on the train right now.
Got it. Josh, it's good to have you. Emma, I see the comment, so we need another word for TradFi. Emma, wise as always. David, I have no idea what that word will be, nor will I wager on a good word either. David, the other thing, and Josh, let's pull you into this conversation as well. Those kind of stars aligning for crypto, how much of that is new SEC Chair Atkins being confirmed and some of the comments he's made about clarity for crypto? Josh, do you want to weigh in on that?
Sure. I think this is a long time coming, obviously. Yes, I think every little step or big step counts. But I think, we're all waiting with bated breath to see just where the new lines will be drawn. And I think every positive statement in that direction is a big help.
Yeah. Josh, to that point, though, we're still waiting on resolution of some cases, Ripple most predominantly, if I'm correct. Remind me is there anything else outstanding?
I believe we're still waiting to see about Binance.
Oh, right. Yes.
That case is paused, but I don't think that it has fully gone away, although many expect that it will. And it's such an interesting situation, of course, because remember, it had pretty extreme allegations that had been made. So the fact that that case has been paused and potentially stopped from proceeding altogether, I think that in and of itself is a huge move.
Go ahead, David.
Ron, the Binance case is a really interesting one because all the other major regulators the majority of them had settled with Binance for around $4.2 billion, and the SEC did not go along with that settlement. And I think a lot of people were surprised that they didn't go along with that settlement, but I think in large in part, they wanted to retain some of the securities claims that they wanted to make that, potentially alleging that, that Binance was listing unregistered securities and had an exchange that was allowing unregistered securities to trade. So I think there's a little bit of, it's a little more complicated because if you think about the fines, the different regulatory agencies, share the fines in some way. And the SEC never really got their piece of the pie on that one because they wanted to go separately. So I think that case is a little different because, again, the majority of the issues in the Binance case were around, money laundering and sort of practices on how they handled compliance that weren't consistent with what, the DOJ's view on what compliance should be. And also Binance being reportedly approaching and encouraging US residents to trade on the exchange when they weren't allowed to trade.
Yeah.
So those were really the main issues that occurred. And, obviously CZ went to jail for a few months. So the securities issues that they have or, potentially have are really not a lot different than what Coinbase or Kraken have.
Right. And David, to that point, the event I mentioned yesterday, it was an alternative investment event. A lot of fun people and some deep experts, David, focused on some of the things we're focused on in the crypto asset world. And, their commentary is what you're talking about, which is the cases that go away are the cases that probably either lacked some merit or could settle in some way. But those folks out in the crypto world who think, they're not going to patrol for fraud, they will. And they're allocating resources to do that. So again, caveat emptor on a lot of this stuff, but fraud is still fraud no matter the market, which brings me to my next point, David. The market's access is expanding for crypto. And Emma, to your point, maybe the other word is not a different word for TradFi, it's just finance. David, one of the announcements we had seen recently, and it didn't even have it in the agenda, correct me if I'm wrong, Schwab predicted or noted that they'll probably have spot Bitcoin available on their platform before the end of the year. What's your take on that?
I mean, it's not a surprise. Look, as long as the regulatory winds are favorable and regulated entities can be trading in certain cryptos, it's no surprise that traditional finance wants to be in the action, and it's either build or buy. So it looks like Schwab is taking the build approach, and look, it makes sense. I think this is a part of the market that they'd want to have, and I suspect that all the major wirehouses that have trading as part of their ecosystem will either have some sort of system of their own, spot trading of their own, or partner with someone that's spot trading so that they can partake in the profits.
So what are the other firms, David? We're talking about Morgan Stanley, arguably. Are we talking about what, Fidelity potentially for spot stuff? What are your thoughts?
Fidelity is already sort of positioned for that. I think a lot of the major online brokers will partake. And then at some point, once we get full regulatory clarity, we'll see partnerships, or maybe, who knows, maybe a big traditional finance company buys a crypto exchange.
Yeah.
Look, we have several, Coinbase is public, Kraken is filing to go public. Who knows, maybe a traditional finance company approaches Kraken and says, look, you're going through your S1, we want to buy you.
Yeah.
And I'm not saying that I don't have any knowledge of that, but I'm just saying, traditionally, when companies file their S1s, a lot of times potential merger partners come out of the woodwork. And, there's opportunities to be sold straight away instead of running as a public company. Because as you know, and a lot of people know, running as a public company is much different than a private company. There's a lot of cost, expense, and time that goes with that. So, look, anything is possible. Oh, wow, Josh, we see you now.
We see you and we hear you, Josh, and that is dedication right there, my friend.
Yeah, sorry guys, it was getting out of Penn Station. Again, it was delayed by a long.
No worries. It's good to have you. Josh, David, I want to ask one thing, and for everyone in the audience, David, we missed you last week, but we had the privilege of hearing Josh say the phrase risk on at our last broadcast, which was absolutely amazing. So David, I'm going to pull the both of you into the macro conversation a little bit. We talked about tariffs a bit earlier on, David and Josh, and one of the things, David, that we've been talking about often is we often mention the VIX, right? And if you remember the volatility index, by the way, for the record, for anyone in the audience, the day Josh leads off with, Ron, let's talk about the VIX, my work will be complete. That will be a great day. But David, when at the height of tariff concerns, VIX was at 55. And for those of us here on the call and many in the audience, we know that means insuring with options contracts gets much, much more expensive. Things are getting really ugly. VIX below 30 now, David. So again, let's paint that macro picture. We've seen Bitcoin up. We're up almost 12.5% this week alone. The 10-year Treasury is approaching 4.25, maybe sub, which is arguably good stuff. David, I'm going to go to your favorite topic. The altcoins aren't following, though. What's going on?
Well, you know what, Ron? I'm going to push back against that a little bit. I think we've seen some of the altcoins starting to bubble up. I was looking before we got started today, and SUI has been up, I think, 50 to 75% in the last week. I think we are seeing some of them bubble up, and I think really what I think we're waiting to see is sort of confirmation that this Bitcoin rally is going to continue, and that either we consolidate around here or go up. Like, I could see us retracing a little bit, but I think that's what people are waiting for. And even Ethereum, I think, broke 1,800 and is above 1,800. And so, I think we are seeing green shoots in the altcoin sector, and really waiting to see if Bitcoin holds these levels or even a small decline. But if this is sort of where we're going to be or higher going up forward.
And David, again, I'm not purposefully bashing the alts particularly, but I will say this, and the three of us have spoken about this often: be careful what you buy, right? There's a speculative aspect to some of these. Others have really potent and powerful use cases. Is there a Josh token, Josh, that we should be talking about in this conversation?
So there is not, but we should not be talking about it, even if there were.
Fair enough. I will shut up, Josh.
I will add, Ron. I will add that some of the meme coins have gotten some momentum too. So it's interesting. Usually we're seeing Bitcoin and some of the meme coins go up, and I've noticed a few that I sort of follow that have some have gone up 50-60% this week. So,
but you've got to admit, though, some of those meme coins have a bit of the speculative fervor as well.
Oh, they're on the riskiest end of the curve. But it's just sort of interesting that there's been this correlation between Bitcoin and certain meme coins. And then as there's been some rotating into altcoins. But I want to make one point that's different this time, is that the people who have Bitcoin now are not the same people who had Bitcoin a few years ago. And so when Bitcoin would go up, some people would take some money off the table, some value off the table, and put it into altcoins, and then you'd see a rally in altcoins.
Right.
The people holding Bitcoin now are not necessarily people who are going to sell and go into altcoins. There are people who have it in their, either in their securities account, they're holding IBIT, they have it in like a diversified fund. So they're not running to roll, some of these profits in. So I think this cycle is going to be a little different that way.
Yeah. And for everyone in the audience, by the way, just to go back, when I joked about Josh Coin, Josh is so polite. That is her kind way of saying never joke like that again. And I got it, Josh.
No. I was just teasing, just saying we don't want to have any questions about whether it could have an expectation of profit.
Well said, Josh. David, Josh, I want to go back to something else. And I keep bringing up this conference yesterday simply because there was a lot of great thought leadership. David, to the perspective that we've had from internationally, and I totally forgot where I was going with this. Oh, sorry. You mentioned ETFs. The pipeline of ETFs to be approved, and Josh would love your perspectives on this as well. David, do you know what came up frequently from overseas folks was staking for ETH ETFs? So this really tells me that you had hit on something a long time ago, which was that might unlock billions potentially in ETH ETF flows. What is the challenge there? Is it still that kind of lack of clarity, David and Josh, or what are the next things that need to happen in your mind to bring that cash flow, that flow in?
Well, look, I mean, first of all, you have to be able to, the ETFs have to be able to stake them in the first place. So without getting SEC approval to do that, it's sort of a zero-sum game. Look, we have to remember, people who are staking ETH and getting a return are not necessarily going to want to buy an ETF where they don't benefit from that return. It's almost like saying to you, Ron, I'm going to give you an ETF, that's going to have a 10% return. But if you stake the ETH, and the staking's at 4 or 5%, you can get a 15% return.
Yeah.
A normal rational actor, or one who's willing to go through the effort to stake ETH, will stake the ETH and be like, well, what's the point of me buying an ETF? So until there's a level playing field for the Ethereum ETFs, I still think you'll see this dislocation for you.
Yeah. Josh, agreed?
Yeah, so I agree with David. I had someone ask me earlier today, actually, about is it worth it for us to have additional altcoin ETFs if there isn't staking? And to my mind, aside from yes, I do think it's worthwhile. Just my personal view, but also just from a psychological perspective, for many of those who wouldn't be the ones either who would be staking their own assets, or who are, frankly, large institutions, banks, others, who might, once they see a particular altcoin ETF, they may say, okay, now I'm comfortable. The
Right.
SEC blessed this, or not blessed it, but approved it, and therefore I'm comfortable that it's not a security. Because even though we now know the U.S. is open for business, drawing those lines, determining exactly what's in, what's out, what the principles will be, I think is tough for some of the more traditional players. And I think again, that's one more psychological point for them to say, okay, I not so much I trust this token, right? So that's a different question, but I trust that this will not later be deemed to be a security.
Yeah.
At some level.
And,
No, Josh, it's a good. David, go ahead. I'm sorry.
No, one other thing I was going to say, Ron, is that remember, when Coinbase went public, the SEC blessed the S1 and the disclosures in the S1, but they didn't bless the underlying business. And this was this fight they had that led to the, in part, the lawsuit that the SEC brought. So I think what people will see is that the container that the ETF holds is going to be blessed by the SEC, but they're not going to be taking a position on the underlying token. And I think the follow-on to that is we have to remember that a lot of people are still uncomfortable using crypto exchanges. They want to use things they're familiar with.
Yeah.
And I think over time, people will get much more comfortable with crypto exchanges, but there's still a group that isn't. And so to have a vehicle where they could buy the ETF and have it in their, securities account, that's going to be comfortable to them, but that will also unlock a lot of liquidity into some of those other tokens.
Yeah, I mean, it's easier for a lot of people in the U.S. to log into their Charles Schwab account or their Fidelity account, David and Josh, than it is to, David, this goes back to something the three of us have been talking about probably for the better part of 6 years, which is it's better, but the user experience in crypto is still wanting, I would argue.
Well, Ron, look, I help several of the exchanges that exist today, come online, list tokens. It's come a long way. I think the UI on the centralized exchanges have come a long way.
Agreed.
I think the issue that we're facing is really it's a security issue a lot of the time. I must get 5 texts a day saying that my various account, there's been an unauthorized attempt from somewhere in Eastern Europe, and dial this number. And for people should know, a number of the centralized exchanges, they don't send you text messages to dial some random number. And so, you get all these things. People still have concerns about hacks, not about the exchanges necessarily being hacked, but their own personal accounts being hacked. So we still have some maturing to do in that way. But I do have faith in the centralized exchanges. And I'm going to push back on you a little. I do think the trading UI is better. I think
It's better.
Where I agree with you is on the decentralized exchanges, the trading UI still has a long way to go.
The decentralized exchanges, David, and I wish more people understood this better in the retail space, cold storage.
Yeah.
There's just so much work that needs to happen there unless they want them to sit in with a centralized exchange, and then again two-factor authenticate and do all of the cybersecurity controls that you need. Josh, I just want to hit some comments real quickly. Emma Channing, one of the lead founders with all of us of the Josh fan club is Yay Josh, because Josh is here. And then again, I'm just going to say it. Nothing we talk about is accounting, investment, legal, or tax advice. Try Mooncoin, she says, and see how long it takes to go away. I'm not trying it. Not talking about it. Sorry, Emma.
Well, may I just jump in for a second,
Please.
by the way, about this, the user experience?
If you
I
want to,
agree.
driving that downtown New Jersey.
Yeah. So we'll wait for that announcement.
Waiting for this announcement.
Yeah, the user experience, it's getting better.
Yeah.
But I'll tell you one thing that's really still difficult: the bridging of tokens from one ecosystem to another is still challenging, and I still think that is a long way to go.
Josh, go ahead. I know you want to. Sorry.
I agree. I'm part of the David Brill fan club today about what he's just been saying about user experience. But I would say this as well. I think and I don't want to say the newer generation, but I think it kind of is the newer generation. Um, for those just coming into crypto and just coming into TradFi, all caveats, Emma, and apologies for using that term. But I don't necessarily think it's harder to figure out like a centralized platform and hold digital assets there. Again, not your keys, not your crypto, all caveats apply. But going on to Charles Schwab and looking at it, I don't think Charles Schwab is that much. I don't. For someone who's not familiar, I don't. Certainly, if you've for many years been logging in to one interface, fine. But I think if you just go at them as a new person, I don't think one is appreciably simpler than the other. I think the user experience can be challenging
it's
in
much
either.
better. Yeah, it's much better, Josh and David. I'm with you than it was a long time ago. And David, Josh, you've both said this over the years that we've all been working together, which is, get your hands dirty a little bit, get involved a bit to the extent you're comfortable doing that, and do it in a safe way, particularly with the deck stuff, David, which I think is interesting. The other comments we've been hearing in a lot of our meetings have been what's going to be institutional engagement in DeFi, which is, I think, still a big question mark, but an important thing that needs to be addressed as well. David, Josh, I as we approach time, and I know we're all busy, we've got a lot of stuff going on. I want to go back to the price points. Josh, forgive me, I got to go markets on David. David, we're barely holding on to 95 by the skin of our Bitcoin teeth. What's the support level, and what are the options numbers that are backing some of that up in your mind?
So there's a lot of expiration at the end of April around this 95,000 level. So It wouldn't surprise me if we hover around it. The one thing is we are seeing a lot of big buyers come in and accumulate. So we could see a little dip, over the weekend, and then see, things move forward. But, next week. But I still think this is an accumulation area now, where I think this is a big test area. There's a lot of supply here to work through. So we really need to see, are we going to see buyers come in? Are we going to see people open up short positions here? So I think this is an area really, this and 92K are really key areas to watch.
Yeah. I want to segue for a split second because Emma is lighting up the board. Do I want to bet when Josh will lead with VIX? No, Emma. Love you. Not betting against Josh or David on any side of any bet whatsoever.
And Ron, did you mention that you repaid the bet?
I was going to close out with that, but we will do it for everyone in the audience, and Emma can no longer yell at me about it. I am a man of my word. I had the privilege of sitting down with Josh Klayman and David Brill at Porterhouse in Columbus Circle near Central Park. Shout out to the Porterhouse team for some lovely steak dinner, which was good stuff, and a cake that I couldn't spend the time to enjoy because I had to leave. That was about this big. It was double the size of any of the meals we had. But Josh, David, it was a privilege. I look forward to going back there with you both again. My conscience is assuaged, David. Hopefully you're okay with that.
Yeah, no, it's a great dinner. Thanks so much. Porterhouse was great. We had a great view, and it was great to, coming in from Florida, Josh coming in, you from Jersey. So it was great we could all be in the city together. And I'm actually headed to the Cornell Blockchain Conference event right after this. So really making the most of my time in New York this week.
For the record, for everyone in the audience, David still references some of the other 7-star restaurants that he goes to that we'll have to go to in the future. I keep pushing Longhorn Steakhouse, but I don't think, Josh, that will be happening as well. Josh, David, I wanted to segue to one last thing, and Josh, I would love your input, and David as well. One of the conversations I've had in New York City a lot this week was with a lot of the funds. David, you and I mentioned that in the virtual green room. Josh, so many overseas funds, again, let's say Cayman entities with subs in BVI, whatever it may be. So many of the conversations we had was, how do we get back in? How do we get back into the United States? And I know Josh will be covering that at a future legal working group meeting, but what are you seeing in that kind of reshoring of stuff in the crypto space?
So I would say it goes beyond funds, right? It's really all kinds of entities. In fact, last night I was at an event at the with the British consulate at the British residence in New York, and it was really about UK, US, fintech and crypto relationships and expanding, you know, in part in the US. I also went to an event last night that Walker's hosted, which was really great, where we were talking about the various jurisdictions and onshoring. But as a practical matter, I mean, so many different entities, for example, that have stayed outside of the US. They're looking into things like state banking licenses or other options, as well as M&A, as well as, frankly, I mean, even at the most basic, even things like secured loans, where things like died, literal memos died prior to, or rather at the fall of FTX, like thereabouts. They're all being called back. Maybe not every single one, but they're being brought back, and there is an incredible appetite. And I think one of the most challenging things is trying to show people where, in fact, the guardrails are and how far you can go.
Yeah.
But I think there's a great interest in people getting to know legislators, also state regulators, various others, just because people want back in, as you said. But what do you guys see?
I want to stop for 1 second. David, you and I get invited to bars for happy hour. Josh gets invited to consulates. So it's like an entirely different demographic for both you and I. No, Josh, I agree with you, and we're seeing it across the spectrum of firms looking to get involved. And I think one of the challenges, as you alluded to, this kind of state licensing. I have a British colleague who's often said it's easier to launch something in the UK given the status over there versus do I get a federal license in the US, or do I get multiple state licenses and the year or two it takes to do that? David, agreed, or do you see something different?
So I'm going to take it from 2 points. One is we're also seeing clients who want to onshore.
Yeah.
And while there may be some more regulatory clarity, there's still some thorny issues to deal with. The tax issue is a thorny issue to deal with. What do if you're going to launch a token, it's still not totally clear how you go about that and it not be a security if you were doing a fundraise, because a fundraise is by its nature a security in our space, unless it's a meme coin. So I think there's still some thorny issues to work through. And then secondarily, the state and federal regime is very expensive and very time consuming. And so it may make sense still to be launching in the UK or maybe in the EU, where there's a more defined approach and it's less time consuming and less costly. But that being said, of course, we want to see things built here, go to market here. So I think all of us collectively working with our Congress folks, and we had some of these discussions when we met with some of the folks on the Hill and when we met with the SEC, that we need to streamline an approach so that we can bring capital forward. We can bring projects forward here in the US, but do it in a meaningful way and not drown people in millions of dollars of costs and license.
And David, just to add to that, and so many of our members and colleagues in the WSBA have this conversation. Josh, David, shouting out to, Michelle Gitlitz and Joe Sicolo and the states folks. But I can't emphasize this enough, how critical it is to get the right experts who can get you some of these things, particularly from the legal profession. There's no shortage of consultants who can help do this, but you really need to do it right, or the costs can be pretty extravagant. Josh, David, as we start to wrap up, I want to ask a question I've been thinking about, and I hope I'm ill-informed on it, but is it me or is the CFTC quiet relative to some of the things that we're seeing? Josh, you want to take that?
I mean, it certainly has seemed more quiet than than the other regulators, but I think in part that may just be because the CFTC has long taken the position that digital assets generally are commodities, whether or not they're securities. So that sort of position um, doesn't doesn't really need to change, even if the changes to the securities um, interpretation of transactions in digital assets changes.
Yeah.
And I'd also say, Ron, that we've had a lot of regulatory debt to unwind on the SEC side of things, which we're working through. Whereas I think on the CFTC side, there's less of that. But there was a comment letter that's gone around about perpetual futures, I think we saw this week. And so, I think there are, movements forward on some of the issues that are outstanding. But I think that there are a lot of issues that had to get resolved on the SEC side. So that's why we're hearing more from that side.
David, that was my version of a softball, because you and I did talk about the FTC request for comment, which we're considering doing as well. Josh, David, as we start to wrap up, obviously we don't keep our eyes off of what's going on in DC, including the stablecoin legislation that's moving through Congress. I know DC's got a lot of its own stuff going on. I don't want this to be predictions particularly, but we submitted comment, David and Josh, around stable, and I know Genius is still percolating. Any thoughts on how that's moving forward?
I've been doing a lot of reading about stable and the market structure bill, and there's a real debate on whether, one, if stable should move forward, or if we should try and get a comprehensive bill for both stable coins and market structure. And it's a very dynamic debate. Right now, I'm leaning towards, if we can get stablecoin and legislation approved in a form that's generally agreeable to the majority of the industry, that we should get that done. I think that we should take the wins where we can take them. And I think we run the risk, if we combine bills together, that constituents that may have legitimate concerns may, slow down the process. So yeah. I'm of the view of, if we can get to stablecoin legislation that we can agree on, even though there's a difference of opinion about the yield being passed on or not, that we should try and get there rather than bundling them at this point.
Agreed. Josh, David, let's wrap it up. And I know you're both super busy. David, you're heading out. Josh, you're heading in. So thank you both for the time. Before anyone in the audience asks, I don't own Trump coin, and I'm not going to the dinner that apparently everyone keeps asking me about. We do have a busy week next week and a lot of events coming up as well. We've got our crypto M&A webinar coming up, David, soon. We're going to have a demonstration for everyone in the audience. Our friends at DTCC will be showing us Composer X. We've got a pitch book seminar that's going on. One of the analysts there will be talking about the crypto market as well. So lots going on. David, Josh, I will be in Washington at least one day next week, meeting with some folks at Treasury. What about both of you? What will you be doing next week?
Besides reading a lot, I am headed to Tallahassee on Tuesday. So I'm looking forward to that trip, the state capital in Florida, for those who don't know. And then I'll be back in New York for a couple of days. But I think it's going to be a really interesting week next week to see what levels we hold on to, especially around the end of the month. And I think you're going to hear more next week about, some of the banking issues. And I'll tease that I read a Cynthia Lummis quote, who doesn't agree that the Fed has totally cleaned the decks when it comes to crypto. So I think there's more to come on that next week too.
Josh?
So believe it or not, I should be staying put next week.
I don't believe it.
I will have a number of meetings
I don't believe it.
with DC, but they're likely virtual. You can't hear me?
We can hear you very dimly.
Well, I was saying it's likely that next week I don't go anywhere, which is shocking, I know. Right now I'm heading actually to Philadelphia for I'm speaking at the Wharton Entrepreneurship Conference this afternoon. But next week I will be largely staying put, although I do have some meetings with Washington that are virtual.
Josh, they're looking to have you at the Wharton event. Looking forward to your feedback on that. Same thing for me. DC next week. Lots of reading, lots of working group meetings, and lots of interested overseas companies that are coming to us and saying, "What do you guys do in crypto, and can we get involved?" Josh, David, let's leave it there. Safe travels to you both. For everyone in the audience who joined us, thank you so much. Emma, thank you as always. If you've got questions for Josh or David or I, info@wsba.co. Until next week, have a great weekend, everyone. Take care.
Bye.
Bye-bye.
You guys, bye.